Good morning, traders. It's Richard Miller here doing my Ichimoku Cloud Chart market review. And this morning I'd like to start with the weekly of the S&P 500. The market's a little bit extended now from the top end of the cloud. We did take out the old high of 3393. Nice strong rally, but the market's a little bit extended now, right for a bit of a pullback to retest the 3393 breakout zone over the next couple of weeks. And it's a little bit extended from the top end of the cloud and right for a pullback. It's been a phenomenal rally after rebounding from 2300 and 2400 support zones. Broke through the bottom end of the cloud, rallied, broke through the top end of the cloud. Top end of the cloud became support. You can see there significant support at 3120. And the standard line cloud is still catching up, but we do see a bit of risk in the market for pullback because the standard line is the standard line down here is quite far extended from the price, and the turning line also a little bit extended from the price. So the market is now ripe for a bit of a consolidation pullback and a retest of the old high here for support. So levels to watch out for is 3440, and where that number comes from the front end of the cloud. That's a key support zone. The turning line is made for some fantastic entry points. You can see here, there's a lovely entry point there. There's been a lovely entry point there. And these were all fantastic entry points. Profit taking zone is when the price action is a little bit extended from the cloud. And we can just try and measure that to give you an idea as to when the market, I can't get an information line in there, so it's not, you have to actually look at, so you can see there's a 35% distance from the top in the cloud. Yeah, sorry, that's scaling not going to work. The drawing thing needs price action on both sides. But in any case, you can see the distance between the price action and the cloud there is quite extended at this point in time. All right. So now what we look for is a snap back to the turning line or the conversion line for new support. And similarly, that will be another secondary entry point into the market. So watch out for the market to pull back to 3440 and first test the turning line and then the standard line. By the time the standard line picks up for 3440, that should be a nice consolidation entry point in the market. But as for the S&P 500, a little bit extended from the top end of the cloud, and that brings a little bit of risk to it. If we look at the 4-hour chart in the market, you can also see, yeah, you can see the steep ascent, steep slope, and the distance between the top end of the cloud here. The support zone is a little bit extended, so we do need to see some form of consolidation. So you can see historically, every time we get quite extended from the top end of the cloud, we have the pullback back down to the front end of the cloud. So on a 4-hour chart, the levels to watch out for is this one. Okay, 3,500. Okay, so that's the first stop that we can make in September for a consolidation or pullback. But note here, even on the 4-hour chart, the pullbacks to the turning line, the green line on the chart here has been very, very positive for a swing trade back into the market. But watch out for the extended, the distance between the top end of the cloud and the current price action gives us an idea that the market rally is a little bit on the extended side. So it's moving into profit taking zone. You can have a trailing stop loss of twice the average true range at these levels, and then just get stopped out automatically as the market pulls back for that consolidation. But market's a bit extended from the top end of the cloud, and watch out for a retest of 35 and 3440 in September. Until next time, happy trading.